Hello, and welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, on October 24th, 2025, we are diving deep into Intel Corporation, ticker Intel, which is experiencing a massive surge following its Q3 earnings report released after the bell yesterday. The news is overwhelmingly positive, with Intel smashing Wall Street's expectations. The company reported adjusted earnings of 23 cents per share, which is a world away from the 2 cents analysts were predicting. Revenue also came in strong at $13.65 billion, beating estimates of around $13.17 billion. This strong performance caused the stock to jump more than 7% in after-hours trading, with some reports showing it climbing as high as 9%. CEO Lip-Bu Tan directly attributed these results to the accelerating demand for compute driven by artificial intelligence, highlighting AI as a major tailwind for the company's entire portfolio. This isn't just about one good quarter, it's part of a larger turnaround story that has been building for months. Since August, the stock has rallied over 80%, fueled by a wave of high-profile investments, including a massive $5 billion from rival Nvidia, a $2 billion investment from SoftBank, and an $8.9 billion investment from the U.S. government. These strategic cash infusions have not only bolstered Intel's balance sheet, but have also served as a huge vote of confidence in its long-term strategy and manufacturing capabilities. Now, it wasn't all perfect news. The company's fourth-quarter guidance came in slightly below Wall Street's consensus. However, management quickly clarified that this was primarily due to the recent sale of a majority stake in its Altera unit, which analysts hadn't fully priced into their models. With that crucial fundamental backdrop, let's turn to the charts to see how this story is unfolding in the price action. Looking at the daily chart, we can see the broader story of Intel stock over the past year and a half. Notice the prolonged downtrend that took the price from over $35 in mid-2024 all the way down to a low below $19 in August 2024. This period was marked by significant bearish pressure and uncertainty about the company's future. Following that bottom, the stock entered a consolidation phase, building a solid base between $19 and $22 for about a month and a half. This is often where smart money begins to accumulate shares in anticipation of a turnaround. The entire dynamic of this chart changed dramatically on September 18th. On this day, we saw a colossal gap up on monumental volume, with the stock jumping from a close near $25 to an open above $31. This move was the market reacting to the news of Nvidia's $5 billion investment and strategic partnership, which was a game-changer for sentiment. That event created a new market structure, establishing a massive support zone between $25 and $30. Since that breakout, the price has been in a clear uptrend, grinding its way higher and forming a new consolidation range primarily between $34 and $38. This brings us to yesterday's session, which saw a powerful 4.26% rally into the close, closing at $38.16 right at the top of this range. This was a sign of traders positioning themselves for the good news that was about to come. Now, let's zoom in on this critical period since the breakout to get a clearer picture. The price action since mid-September has been very constructive for bulls. We see a series of higher highs and higher lows, the classic definition of an uptrend. The area around $34 has acted as solid support during this uptrend, while the $38 level clearly established itself as resistance. The stock tested this $38 resistance multiple times over the past month before finally breaking through yesterday. The after-hours price action, which we know surged to over $40, confirms a decisive breakout above this key level. This previous resistance at $38 should now theoretically become a new floor of support for the stock going forward. Switching to the hourly chart, we can analyze the price action leading up to the earnings announcement with more precision. In the days before the report, you can see the stock pulled back from the $38.50 area down to the $36.40s. This is very typical pre-earnings jitters and profit-taking. However, in the final hours of trading yesterday, we saw a very strong reversal off those lows, with the price rocketing back up to close at the high of the day. This V-shaped recovery on the hourly chart was a strong bullish signal that buyers were stepping in with conviction right before the news hit. This momentum provided the perfect launchpad for the post-earnings surge. For the most detailed view of the reaction, let's look at the 15-minute chart from yesterday's close. Right after the market closed at 1951 Universal Time Coordinated, you can see this explosive green candle. The price gapped from the $38.16 closing price and didn't stop, surging through $40 and peaking at $41.61 just after 2021 Universal Time Coordinated. This is what a powerful earnings beat looks like on a chart, an immediate and aggressive repricing of the stock. What's particularly bullish is what happened next. Instead of immediately selling off, the price has been consolidating in the after-hours session, building a base above the $40 psychological level and even holding above $41 for a period. This indicates that the initial surge was met with sustained buying interest, and sellers were not able to push the price back down. This action strongly suggests that the market is accepting this new, higher valuation for Intel. All right, let's pull back to the daily chart to wrap everything up and discuss what to look for next. To recap, the key price levels are now much clearer. The old resistance around $38 has now become our primary support level. As long as the stock stays above this level, the short-term outlook is very bullish. Below that, the next significant support is the top of that September gap, right around $30. To the upside, the first level of resistance is the after-hours high near $41.60. A break above that could signal the start of another significant leg higher. So, what's our prediction? The bullish scenario seems highly probable, I'd say in the 75 to 85% likelihood range. This is supported by a trifecta of strong earnings, a powerful AI narrative, and a decisive technical breakout on massive volume. For this to play out, we need to see the stock open and hold above $40 today. Any pullback that finds buyers at the $38 support level would further reinforce this bullish thesis. The bearish case, which I see as a 15 to 25% probability, would involve a gap fill scenario. This could happen if the initial excitement fades and the stock fails to hold its gains, quickly falling back below $38. A break and close below $38 on high volume would be a significant red flag, suggesting the breakout has failed. So, here's what to watch for. Pay close attention to the opening price and the volume in the first hour of trading. Holding above $40 is the bull's game to win. A failure to do so could open the door for a retest of $38. The price action around these key levels will tell us a lot about the stock's next move. And finally, a quick disclaimer. This video is for informational and educational purposes only and should not be considered financial advice. You should always conduct your own research and consult with a financial professional before making any investment decisions.